Well, let's start with a look at market action, FX in particular, what could be market moving. Luca Santos from ACY Securities. Good to see you, Luca. Let's start with the BoE because that was kind of the major moving piece overnight, flagging some imminent rate cuts.
Look, widely expected, I would say. Okay, widely expected because when we look to inflation, you know, someone can call me crazy because
I'm sure no one will do that.
Well, but you know, there are all of those types of people. When we see inflation coming down from 11.8 in October 2022 to now to 3.4, 3.6, that mark there, it is a big achievement, right? Well, from 11 to 3%, it's awesome. Yes, it is awesome. But I always say, get from 11 to 3 or to 4 to 5 is easy, but now get to 4 or 3 to 2 to 1 is the harder part.
Yeah.
And this is exactly what they have to do now. They've brought the 11.8 to 3.6, 3.4 now, but we can't forget that they have 1.4 yet to decrease to get the target into the inflation. So a lot of work to be done yet from the Bank of England, and I don't think they will cut the rates until next year, to be honest.
Wow, okay.
Yeah.
What about the Fed? We had non-farm payrolls last week. We also had that labour data really moving.
What a surprise.
Yeah.
Yeah.
You know, it's trying to guess when they will start cutting, but what are you seeing in terms of the dollar movement?
Look, very good question. Thanks for that, because I want to remember you last year, 2023, in October, November, September, that quarter, when everyone was expecting 7 rate cuts from the Fed in 2024. The first one started in the first quarter in March. Even I was expecting, because the data was showing to us that there was a possibility for a cut. Well, things changed, you know, the market changed. Since 2024 started, January, too high data. February, still high. March, no cut. And then now we are going to July, no cut as well. June, no cut. So the market is sort of waiting for 1 to 2 cuts this year, from 7 to 2, you know, and I guess to 2 to 1. So maybe 1 cut at September this year.
Yeah.
Maybe. All right. We only had this NFP lower just after 5 months. So all the 4 months back, we still having higher data. So we can't forget about the high data and just look at, okay, now it's going down, let's cut the rates. No, it doesn't work like that. If, let's come back for the Bank of England. Bank of England is still holding 5.5, 5.25% rates there. They won't cut, because if they would, if you think that they would cut the rates when inflation is coming down from 11.8 to 3.4, they would already. But it's still 4.3 to 3.2 inflation is still high, and population is still getting affected by the rates. So there's a lot of work to be done on every central bank. To be honest, I don't think the Fed will cut as well, and if they do, only one.
Yeah.
And the Bank of England as well.
What about our central bank? We heard from them this week.
Yeah, we did, and I always say, one of my friends, Nathan Bray, always said as well, they're not really anything in and anything out. So that means we don't know what we're doing.
Yeah.
Let me be honest with you here. That means we don't know what we're doing.
Yeah.
Unfortunately, inflation is too high, and we can feel that through rental prices, to mortgage rates, to, you know, CPI is still coming low, but still very high for the population. So, in essence, for the RBA, the Reserve Bank of Australia, I think that they won't cut as well this year. There are a lot of to be done yet. And if you allow me to just give a little hint on the Aussie dollar here, we've seen Aussie dollar coming to a rally at the beginning of this year to now, and then we've just saw the RBA giving the last rate statement, and the Aussie dollar sort of get a little bit of a correction there, but still a strong Aussie dollar. The reason being is China. All right, China real estate market is sort of coming up back again, and therefore some of the investments of China this repercute on Aussie dollar, and therefore we can see that the inflow on the real estate market of China came from sort of 1 to all the way to 10. now. So a scale of 1 to 10, it's at the max, it's at the peak.
Yeah.
So Australian dollar will feel this effect positively, of course, therefore driving Aussie dollar up to the market. Let's hope for that.
As you say, don't know what they're doing perhaps, but we've got the budget next week as well. And I kind of got the sense that Michelle Bullock is hoping there's not going to be anything to stimmy inflation from the federal government. We heard today or overnight that Jim Chalmers wants everyone to have more babies. That's not market moving, but what do you think?
If those babies spend more, there is definitely a market moving there.
A lift to GDP perhaps. What's sort of on your forecast for the budget in terms of how that's going to affect markets and currencies?
To be honest, if they keep spending, inflation will keep growing.
Yeah.
It's simple as that, all right? I'm from Brazil and we have the same problem in Brazil. 2014, if I'm not too wrong, I was very young at that time, so I can't remember too much, but 2014, Brazil keeps spending more and more and more, and then they took it off all the law that had like, okay, this is the roof. Now we don't have roof anymore. Let's keep spending even more to try to pay the debt that we have. And I don't want to say that this will happen with Australia, but if they keep spending more and more and more, inflation will continue to come. And this is simple economics, unfortunately.
Yeah.